What is going on, family? Welcome back to the channel. And as much as you can, avoid the headlines, because every headline, there are far more important nuances concerning your bull market. Smash a like. Big up to Nansen AI, my partners for all things intelligence and smart chain in the market. Of course, I'm using Tangem, I'm using Mexi. You guys all know the rest, but let's get on to it. One of the most important aspects of the bull market up till date is this whole idea of recession, liquidity, and the Fed. So right now, the headline is no cuts. As you can see here, I have actually put this super important in our VIP channels, because of course, no cuts confirmed. But what does it really mean, right? So we're going to try and pick the unbelievable Fed minutes apart, which were largely significantly bullish long-term, in my opinion, for a number of reasons. Okay. So first of all, we know that Nvidia had beat its earnings. Massive relief. Having said that, the overall market conditions remain bearish. And the reason for that, this stuff is far more powerful than people like to imagine. Of course, this is the market prediction for rate cuts in December. And so far, Fed to keep the rates the same versus the Fed to cut the rates by 25 basis points. And between these two, we know so far the Fed members are keeping rates the same. So this is where we are. 68% of the odds are right now saying the Fed is not going to cut. Is it very clear? Absolutely not. So this has been swinging from 96%, right? 96% just about 4 weeks ago to 31% today, right? 31%. But is it really done? I'm going to show you a bit of data that is going to change how the Fed moves forward with future rate cuts. So first of all, 31.68 doesn't seem to me that it's a foregone conclusion. It does seem to me that, of course, the Fed is unlikely to cut at this point, 20 days out of the next meeting. But what can change their decision? Okay. And again, guys, smash a like to the video, because I'm gonna share this with you. This stuff is not available anywhere else, right? To make informed decisions, we need to have absolutely clear-cut, ice-cold analysis of the market. So NFP preview, delayed September data could still tilt the Fed's decision. That's very important, in my opinion. And again, beyond the headlines of the Fed not cutting, we know today we have NFP data, but they will not release job data for November and October. That's how bad the job market is. It requires way more attention than people are giving it. So the expectations are 50,000 jobs, or 0.3 earnings, unemployment at 4.3%. Okay, this is the Thursday, November 20th report. This is a huge report, and I do believe today is going to be the most volatile. Most volatility will be today, more than yesterday, in my opinion. Now, of course, economists expect that NFP data will show the US has created a net 50,000 jobs with an average hourly earning increase of 0.3%. or 3.7% year on year. Of course, unemployment rate still holding steady at 4.3%. Okay, so we're back, sort of. Is this bullish for the job market? Is this bullish for crypto, is what you want to ask. So it says here, after the longest government shutdown, we're back, sort of, after the longest government shutdown in history. Of course, the BLS, although they're not releasing any data, will deliver September's version of the monthly jobs report. Now, in my opinion, right, the numbers can play both ways. But if we get bad overview situation of the labor market. I do believe at some point the Fed will cut rates and cut consistently, because there is something else within this headline, and that is going to be the Fed's, from the Fed minutes yesterday, the end of QT. And we'll talk about that in a minute. So supported ambiguous is whether we'll see October's job cut, November's job cut, or November. We're not going to get this, right? Of course, NFP forecast, regular readers will know we'll focus historical on reliable leading indicators to help each month's NFP report. But given the government shutdown and the fact that they are not willing to release, even though the shutdown is over, it is quite difficult to actually suggest that this is going to be a continuation of a bullish market. Overall, I think the job market is very, very bearish. And again, a strong dollar is happening right now. So we may see the Fed ultimately coming back to this. We may see that the odds swing in favor of cuts. Again, we are not sure. So far, we'll have to go with what's available, and that is no cuts for now. Now, in addition to that, there's a bit of headline that everybody missed out yesterday. So while, I mean, again, this is going straight to our VIP guys, just for $9 a month. I think everybody should be there. Even economists, if you're an economist, have nothing to do with crypto, you should be reading this stuff. So the most significant line is, so I've analyzed and went through the Fed minutes. Fed minutes, all participants noted that it is appropriate to conclude the balance sheet on the 1st of December. Okay, this is absolutely key. And I don't know why the market is not really picking this up. There you go. December 1st, and of course, in addition to that, conclude balance sheet reduction program. This is basically what it means to you and I, is friggin' end of QT. Now, I don't know about you, but if you look at historically, when they end QT, this is significant. It doesn't play out straight away, and this is what's killing retail crypto investors, because they believe as soon as you go into either the seasonality or whatever there's been, we've all been wrong. We need to follow the money and not the headlines. So that's a massive concession right there. Now, end of QT, the question is, can you handle, or can we handle the heat in the meantime, right? Can we handle the heat in the meantime? Now, obviously, the average crypto investor cannot handle the heat. Otherwise, they would have been absolutely well off. So nobody can handle the heat. Most people are panicking. And because we use Nansen and other, Arkham and other smart intelligence tools on chain, we know what the whale activity is like, even though the market is down, right? And that's quite significant because, again, fear and greed index here is still sitting at these levels. And we have talked about this. And this is the time where we need to compare what happened previously over here and what's happening here. Very similar, right? Capitulation. Everybody sells their crypto. Oh, this game is bullshit. And then we get a massive, massive pump of sentiment and crypto. And I think it's going to happen again. Now, whether you're here if you're here for the short term, you might as well trade meme coins because the casino is somewhat open, right? But if you are buying fundamentally strong cryptocurrencies, your Arweaves, your Suis, your Caspers, your Taos, right? Then you do have, or you must have at least, a longer perspective in this game, right? RWA, DePIN, AI, the three most useful narratives to change the world. The world is changing through AI. AI needs computational power. Guess what? AI and computational power and resources and cloud networks are all on the blockchain decentralized. Decentralized means it is not owned by one particular entity, right? You've got permanent storage in Arweave. You've got all of these things happening. You've got general purpose layer ones with DeFi, like Sui, like Casper, like Say. If your perspective is slightly longer, you are going to be those Solana millionaires from back in the day, or those Ethereum millionaires from back in the day, because you have conviction over time. Time in the money beats time in the market. Sorry, Timing the market beats timing the market, right? Hope that makes sense. Time as in duration, timing, of course, nobody wants to be timing the market. So the Fed widening balance sheet contraction amid tightening money markets, right? So if you're looking at this headline, right? So this is basically, again, regarding quantitative tightening. Now, what's happened yesterday, of course, gold, strong dollar, dropped gold prices, right? Off the back of the Fed minutes. But today's NFP day. So let's talk about this. So what I'm saying to you is end of the balance sheet has been universally agreed by the Fed. They tell us that black and white. Short-term bearish events, liquidity. However, NFP is going to be extremely volatile. It'll give us an important indication of the labor market, which could then impact this bit of data and change the Fed's decision. Even if they don't cut in December, you still have a situation where the NFP, the BLS, all of this will weigh heavily on the Fed. For the moment, they chose to fight inflation, of course. They're ending QT and they're cutting at the same time. Now, this is all pretty significant in my opinion. And if we look at historical, if we look back historically on what's happened, right, in this particular QE, QT periods, right? October 2014, end of QE, so end of quantitative easing after 3 years of determining substantial improvements in the outlook of the labor market. What you're seeing here is substantial improvement, and you're seeing labor market. What am I talking to you about now? The labor market is in catastrophic free fall. Over here, they are determining substantial improvement of the labor market. So what did they introduce? Quantitative tightening. And they ended quantitative easing after determining that the labor market had improved significantly. December 2015, let's have a look at December 2015. The first time after keeping them to zero for 7 years. Now, this was as a direct result of the financial crisis, okay? So they raised the rates there. And over here, they began QT in 2017. And of course, at the end of that period, after 3 years of ending the QT, quantitative easing, the Fed started draining the 10 billion that they've done from this period. And this is why we had the bear market 2018, okay? So market performance during 2017 to 2019 quantitative tightening, it led to the 2018 bear market. That was very clear, okay? And then, of course, 2022, the Fed obviously ended its asset purchases. And now, the reason I'm showing you all of these significant and strong quantitative tightening is because what happens is after that, when QE ends, we go into bear market. When QT starts, when quantitative tightening starts, we go into bear markets. When quantitative easing starts, we go into further bull markets. And the examples are very, very clear. Okay. So here, the lag time between policy shifts and of course movement. Here you have quantitative easing ending for the first rate hikes. This was in 2014. At the same time, we had a massive bear market in 2022. And this bear market had nothing to do with your little FTX falling or your little Luna run. As crypto people like to remind themselves, that's what caused the bear market. Absolutely bullshit. The Fed started hiking rates. Okay. First rate hike, 2015. Okay. To 2017, 22 months. End of that resulted in an explosive bull market, the 2017 bull market, right? And then over here, what we have is what caused 2022 to 2023 bear market. And this was quantitative tightening. And of course, this is what almost happens every single time that you see stuff like this. 2014, 3 years over there. And during quantitative tightening markets, which is what we're coming out of, 2018 bear market, right? You're seeing here. So the reason I'm showing you this data is there is absolutely no precedence where quantitative tightening and bear markets are exactly what they are. They are together basically in the normal sense. But you don't have a situation where the Fed is telling you that all members have agreed. Can I remind you this again? All Fed members have agreed to end the balance sheet restriction. Okay? You do not get that and then go into a bear market. Now, I could be wrong. And I'm not sweating because I'm buying Tau, I'm buying Ondo, I'm buying Casper, I'm buying Arweave, I'm buying Axelar, I'm buying quality projects. I'm buying Casper for the long term. See if there's a... So I'm relaxed. But I'm telling you right now, in a situation where the Fed, as of December 1st, has basically concluded balance sheet reduction, guys. So we may suffer for a few months. I understand that. I understand most people can't comprehend and look at price movement. I think sentiment is even more important than price, in my opinion, right? And in a market where this is the headline, our Fed's not cutting, because obviously everyone is now a high-level economist. I would just say pay some, be cautious. Be cautious, because right now is typically a typical lag from QEN to market pumping, right? End of QE is not the same as end of QT. We are now, the effects of QT appear more than paint drying, but much smaller than quantitative easing effects. So all I'm saying to you in this video, guys, friggin' smash the like. This is absolutely top-notch stuff. And again, whether we argue about Bitcoin's current price, really don't care. What I do care about is accumulating and taking the blessings as and when the market recovers, I can come out with top-notch blue chip assets. Because this is not an environment where they are ending the quantitative tightening, easing, right? So the Fed minutes gave me a lot more to be positive about than they did to be negative about. I know most people aren't looking at this, but hey, listen, even if I'm talking to myself, even if one person benefits from this, this is not your typical, oh, this coin's going to go up 100x and this one's going down, mate. That's what you get from crypto bros especially. So take my information, thank me by liking the video, smash it, and I'll catch you on the next one, guys. Take care.